Money won't buy you happiness, but if you can't master money, you will be miserable in life. This course will give you the types of information you need to understand the basics of personal finance with simple, easy to understand templates. You'll be amazed how much this can improve your life. Welcome, I'm Matt from Shoe Capital, where I talk about all things personal finance, investing, and business. And we're going to walk through a template today with 3 major sections. They include understanding your income statement, your household budget, and calculating your net worth to give you motivation. So the first thing we need to start with to build this story is understand the why. Why do you want to care about understanding personal finance and mastering it? There's a couple examples listed below that we'll talk through. The first is, if you don't master money, it will master you. It doesn't matter if you're just getting started in life, working an hourly wage position, or you're a superstar athlete. If you don't have control over your finances, you will fail, you will have challenges, and you may end up destitute. And I don't want that for anyone watching this video. Next, if you can understand your finances, you can make decisions with confidence. Wouldn't it be much more satisfying to go to the store and know, yes, I can buy this, it's not going to screw up our family life, and it's going to be a good thing to help us out? Or do I need to do additional planning to make this purchase that I want to make? It can also improve our offensive positions by allowing us to motivate our growth. If we're reviewing our salary on an annual basis and we're not happy with what we're seeing, it might give us motivation to pursue new skills, or seek a raise or a promotion, or maybe a whole new career altogether. But until you understand these things and study them, you may not know to push your boundaries there. Also, by growing our finances over time, we create a way to passive income which will allow us to support ourselves when we're no longer able to physically or mentally work. There may come a time in the future where we cannot go to a job for whatever reason, so it's really important to create some passive income that allows us to sustain ourselves over the long term. Also, by reviewing your budget, you may be able to identify areas that you can cut in your life that really aren't adding any happiness and doing nothing but draining your bank account. But only by studying these things will you be able to find those opportunities. You also have to treat yourself like a business. If a business didn't study its numbers, it would not be successful. So that is no different here. So the first tab we're going to check out is first understanding our income, the offensive side of the picture. On this table, you'll see 3 major rows. First row defining the different categories, and the second and third row representing income for 2 people in a household. So we used a fictitious example where each person is making $75,000. We broke that out in the second column by dividing that number by 26 to approximate how much money they would make if they were paid every 2 weeks. In the next column, we multiplied that number by 0.65 to approximate deductions associated with federal, state income taxes. So that's how we got there. And then we ended up with our annual take-home pay and what that is going to be averaging each and every month. So this is really setting up the basis of understanding, okay, gross, we're taking in so much per year. We're getting paid on some frequency throughout the year. If it's bi-weekly, you divide by 26. If it's monthly, you divide by 12. And then you need to account for some of the taxes. The next tab we're going to look at is the household budget. So the budget is where you identify every single monthly reoccurring expense you have in your life. So we put together a few examples below. You probably will have rent or a mortgage. You may have auto loans. You may have groceries, clothing, utility bills, gasoline for your vehicles, etc. So you can add as many line items as you need to in this section. This is where you get to define all of those recurring expenses. And you might have to dig around for quite a while in all your credit card statements because you may have a lot of subscription services that you forgot about. So you want to go through, be very thorough through your checking accounts and any credit card statements you have that may have reoccurring monthly charges and list them here. After you've added the monthly amount, this column will multiply that by 12 so you can get the annual amount. And this really puts into perspective how much per year you could be spending on a category. Then over on the right, we've captured what our annual salary is, and we've taken it in a monthly chunk based on that after-tax income by multiplying it by 0.65. So scrolling down further, after you've entered all your individual line items, we'll have the total pay at the bottom that we generated from the first tab, as well as in the top right corner that we just looked at. The total of all your monthly expenses, which is just adding up this column here, and then the difference between the two. And this is your free cash flow. So all those things that you have to pay for every month, unless you cut them, represent all those things you have to pay for every month are subtracted from your income, and this has how you come up with your free cash flow. And this number represents how much flexibility you have in the month. So if you have an unplanned expense you need to take care of, it would come from this. Or if you're looking to invest further in your future, you would have to draw from this money. Particular example, we have a little over $2,000 a month available to us after all of our bills, which is pretty good. So this gives us an opportunity to consider investing, saving for an emergency fund, preparing for a major expense, whether it be a vacation, child care, maybe a trip, all kinds of opportunities, but you definitely want to seek to get into a place where this number is positive. Now you might find after doing this exercise that you have a negative number. If this is the case, you really want to scrutinize all the expenses in this column and see if there are opportunities to cut something, because this will help you get on the right track and make sure you're coming out ahead at the end of the month and you have the flexibility not to be getting further behind. In addition, that's more motivation for increasing your salary on the offense side of the income statement. If you're finding that all the items here you really want to keep, can't live without, then you need to look at ways to continue to increasing your skills and growing your income over time. The third tab is really the scoreboard where we calculate our net worth. So we have our assets on the left, things we own that have value, and our liabilities on the right, things that we owe. So let's start with the assets. So this is where you would list everything that you own that you believe has a cash value. So this would include real estate, brokerage accounts where you may own stocks, bonds, other investments of that nature, cars, jewelry, collectibles, other things you have around the house that have value. On the right side, this is where you're going to list everything that you owe. This would be loans, any types of personal loans or loans that have collateral against them, such as mortgages, auto loans, etc. So you tally those up here. Now these cells over here do a great thing of giving you an idea of if you have an asset that has a loan against it, how much equity or positive value do you have in that particular asset. So we've tallied those up for you here. So to look at this example for this car, we said this car is worth $30,000, but we have a loan against it of $5,000. So the difference is $25,000. We did the same thing for the second car, and then similar idea here for the home equity. So we have a home here listed worth $300,000. We have a mortgage of $250,000 and a line of credit against it of $5,000. So the difference in equity is $45,000 in the green. So great, so good start there. If any of these numbers are negative again, creates more motivation for you to continue to paying down loans against those assets so that you have the flexibility to sell them and not owe money. So going further down on the asset side, you see 2 life insurance policies listed. This is something good to consider, particularly if you have a spouse who's dependent on you. These allow them in your untimely passing to have a quick cash infusion where they can get back on their feet and figure out next moves to sustain the family if something happens to you. So if both spouses are critical to the household financially, you probably want to have at least a term life insurance policy for each of them. So something definitely to look into. So going further down, we're going to check out, I'll zoom in a little bit for you to make that easier to see. We have our total assets here, which is just tallying everything that we just documented above, everything that we own that has value, and that equals this number. And then the net worth is derived by taking the total assets number and subtracting the total liabilities over here, all the loans we have against that property with value. So this is great. So this person is well on the way to being a $250,000 and growing fast. Now you may be in a situation where this number isn't positive. It could be negative. And that would mean that net overall, you owe more than value of assets you have. And this can be a result of just getting started in life and having a lot of student loans, for example, or maybe you didn't have the best guidance and direction to this point on how to manage your finances, so you're in a negative position. So what you can use this is not as negative information to discourage you, as an eye-opening opportunity to say, now I understand my personal financial position, I feel motivated to do something about it, and now this is your opportunity to improve. So the only way to understand something is first to track it and improve it. Just imagine any publicly traded company trying to function without recording their numbers. If you hadn't been doing that to this point, it wouldn't be surprising that you may be in this position. So use this as an opportunity to say, now you're taking control of things and you're getting on the right track to a positive outcome. Below that, for convenience, we've totaled up, if you have them, your real estate, stocks, and automobiles. This is just adding up the numbers that we had above up here under these assets. So those are total conveniently there. Another interesting area to look at is how our net worth is changing over time. Example we have here, we put in some numbers for what investing, saving, investment growth, real estate growth, and dividends on investments might look like for this person. So we're going to say they're going to save about $1,000 a month, $12,000 a year, potentially invest this money. They have existing investments that are going to get returns, so we're thinking they're going to make about $10,000 per year off that based on their totals. They own some real estate, and we think that's going to go up a few percent per year, so they're going to gain some equity from that. In addition, we have some dividends listed here. So using those numbers, you can total those up and you get this. So this is how much this person's net worth will improve every year. So going back to this net worth calculation today, we would expect for this person, this number to increase, all else equal, about this much per year. And you can put in your own numbers above to do your own calculation. But I find it also interesting to break this out further by the month, the day, the hour, and the minute, so you can get a rough average of how much your net worth is increasing day by day or even minute by minute. So for the monthly, you divide this by 12. For the daily, you divide this by 30. For the hourly, you divide this by 24. And for the minute, you divide by 60. So in this person's case, their net worth is increasing 7 cents a minute. It doesn't sound like a lot, but over the course of a year, that comes out to $34,600. Now, if you want a bonus, try and calculate how much average annual net worth growth you would need to have your net worth increase by 1 cent every second. It's a pretty large number, but definitely something to strive for as you're continuing to grow. Now, I'll include a link in the description that'll give you a read-only version of this template. You can save a local copy to your computer, open it with your favorite Excel or numbers spreadsheet, and then you can tailor this to your own numbers. Hope this was helpful to you. Please like and subscribe to this content. I look forward to sharing more personal finance information with you in the future. Thank you.